Good evening, this is the post-market recap by AGI Era. Today is Wednesday, February 18th, 2026, and it is shortly after 4:30 p.m. Eastern Time. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a continued, albeit measured, advance for equities, with underlying currents hinting at a nuanced investor sentiment. The S&P 500 finished the day up 0.56%, settling at 6881.31. Technically, the index is now trading firmly above its previous close, showing resilience as it approaches the psychological 6,900 level. The Nasdaq 100 also advanced, closing 0.79% higher at 24,898.87. The Dow Jones Industrial Average finished up by 129.47 points, closing at 4,962.66. Crucially, trading volume today for the S&P 500 was robust at over 2.1 billion shares. While specific comparative average data was not readily available, this solid volume suggests that today's upward move was accompanied by conviction rather than being a low-conviction drift. Market breadth. Under the surface, the fear gauge, or VIX, data was not available at the time of this report. However, the overall market action, characterized by a measured advance rather than a sharp surge or panic selling, suggests a relatively calm, albeit watchful, sentiment among investors. We are seeing a clear divergence in sector performance. Money flowed noticeably into technology, XLK, which gained 0.62%, while utilities, XLU, lagged significantly, dropping 2.18%. This spread between the best and worst sectors today tells us that investors are favoring growth and risk-on assets, rotating out of defensive plays despite broader macro uncertainties. The macro engine room. The primary driver of today's moves can be traced back to the bond market and currency movements, even though specific 10-year Treasury yield data was not available. The market narrative indicates the U.S. dollar index is up, settling at 97.62, ahead of the upcoming Federal Reserve minutes. This dollar strength, often a precursor to or a reaction to expectations of tighter monetary policy or higher rates, directly creates a potential headwind for interest rate-sensitive sectors, even if not immediately apparent in today's equity moves. A stronger dollar can also impact multinational corporate earnings. Meanwhile, crude oil is trading around 64.93 cents, up from its previous close of 62.26 cents, responding to broader market sentiment and potentially supply-demand dynamics, though no specific news catalyst was immediately evident. The AI and Tech Monitor. Turning to the leaders of this market, artificial intelligence and big tech. NVIDIA finished the day up 1.54% at $187.81, continuing its impressive run. Microsoft closed up 0.66%, while Apple saw a modest gain of 0.18%. Among other Magnificent Seven movers, Amazon was a notable gainer, closing up 1.76% at $269.10. Meta also saw a respectable gain of 0.61%, and Alphabet, Google, was up 0.39%. Tesla finished marginally higher by 0.17%. The strength in this group, particularly NVIDIA and Amazon, is notable. It suggests that despite the broader market's cautious optimism, investors remain committed to the long-term growth story of AI and dominant technology platforms. This performance indicates that capital continues to flow into companies with strong innovation pipelines and market leadership, even as other sectors face rotation. After hours and look ahead. Looking at the after hours tape right now, shares of beneficient BNF are moving significantly, showing a substantial gain of over 93% after hours. This kind of explosive move often signals company-specific news, such as an earnings surprise, a major partnership, or a significant corporate event. As we pivot to tomorrow, investors should continue to monitor incoming economic data, particularly any further insights into manufacturing, services, or labor market conditions, which could influence the Federal Reserve's stance. The market will also be keenly awaiting any further commentary or leaks ahead of the official release of the Fed minutes, which could provide crucial clues on the future path of interest rates and the central bank's inflation outlook. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.